Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who is responsible for the largest silver deposit discovery in history. Learn more at futuremoneytrends.com/silver100. Greetings and thank you for joining us at futuremoneytrends.com. I have a great guest for us today. He's been in the financial publishing business for 30 years. Now, you have to give a person credit who's been in this business for 3 decades, because if you are wrong, you don't last very long. He's been around for 30 years writing about finances, investment, personal finance, the economy. Our guest today is author of the Midas Letter. He writes on the Financial Post, James West. James, thank you for joining us.
It's my pleasure. Thank you, Daniel.
Well, James, I want to start off with what's on everybody's mind, and that's the Fed. And we actually have an interesting day because the Fed and Japan will both be coming out with their decisions. Now, of course, we do this interview and the audience will have the benefit of actually knowing what happens. But if you're looking at this as either an investor or a saver, what is tomorrow about? What is the Federal Reserve going to potentially announce? What is Japan going to potentially announce that is even going to have an effect on the markets? Because it seems to, at least for now, given some unease in the major indexes and then in the mining shares, which a lot of this audience follows, has definitely given some hesitation.
Mm-hmm. Well, I think the Fed is going to do nothing because that's historically what they always do prior to an election. They don't make any changes, and certainly if you look at the comments in the media and the mainstream from economists the world over, if you look at what their comments were predicting what was going to come out of the Fed meeting in September 2015, you could probably just insert those comments into today's media and they are exactly as relevant and accurate. I don't see anything happening on the Fed, though there are a couple of the normal polled sources. I think it was Barclays Bank and I think it was Deutsche Bank who said that they felt that the Fed would push ahead and actually do a 25 beep raise despite the broad consensus now that that's not going to happen. In the case of Japan, the opposite is true. I think there is little doubt that they're going to announce some fresh level of stimulus, which will be mind-bogglingly, long and with multiple zeros. But I mean, that's all that is keeping the Japanese economy in this sort of perception of viability at this point. And so I think in Japan's case, it's definitely going to be hawkish. In the U.S. case, it's going to be dovish. And so, basically it's going to be more of the same.
Okay, so the mining shares, which have done phenomenal in 2016, TSX Venture is actually the best performing index on global markets. They have had a gut-wrenching pullback over the past, let's say, 4 weeks now. Appears that it may be over, but I'm interested in knowing this so our audience kind of gets a bigger picture. When it comes to your sources, the people you talk to, and just from your research, you've been in this business for a long time. Has there been a real sea change, a real changing of the tide for this sector, or is this a bear market rally? Is this a blimp of 2016 and then we resume a down move, or has something meaningful and sustainable happened in this sector that makes you think that this is not just a small move, but this is the beginning of a bull market?
Well, I think this is more a resumption of the bull market that was interrupted in mid-2012. And I think the major catalyst that is actually causing a resumption of a genuine bull market was the negativization of sovereign debt interest rates. And the argument against precious metals has always been, well, it offers no yield, so therefore it's not really a zero risk investment. And now that sovereign debt is actually charging people to store their money in accounts, that renders it worse than a zero yield account. It's it's a asset that is being continuously debased through continuous quantitative easing, we'll call it, and that is essentially destroyed the argument whereby the reserve assets and the safe haven assets of highest quality are sovereign debt. Precious metals is now clearly a superior safe haven asset, and I think it is that realization that kind of penetrated the popular consciousness of the elite global investors, and so you're seeing moves towards producing companies, mid-tier companies, and juniors, and so that that's what's changed, is that sovereign debt is now negative to a large degree, 40% or something at last check. Now, you look at the pullback that has happened recently and think about what's happened in the junior space. Well, January, February, March, all of these companies, suddenly 600 public companies that had been zombies for 4 years got financed, and at 4 months plus 1 day, most of these companies had done doubles or triples or better, and so you've got all these investors in all these private placements that come free trading towards the end of August and September. And of course, what are they going to do? They're going to take money off the table. And so what you're seeing is essentially a wholesale liquidity event whereby, investors are lightening up on the private placements. They're being rewarded for their foresight and their patience. Now they're taking money off the table. But all of that money is going to rematerialize on the buy side in new deals, companies being resurrected, companies that have been dormant for a long time getting rescued. And so this is kind of micro-cyclicality within the much broader secular bull market for metal commodities that is now in a resumptive phase.
I want everybody listening to this to almost rewind for the 1 minute where James just started talking about private placements. He said something that I haven't heard anybody else talked about. In the Future Trends letter, we have talked about a headwind from private placements, but the analysis he just gave, I love that he just mentioned it to us. I hope everybody fully understands it. Yes, we are seeing a headwind, but ultimately these people who wrote, seriously, think about it. Who the hell writes a check to these companies at the depths of a bear market? It's the diehards. It's the true believers. And so what James is saying, and correct me if I'm wrong, James, these people who are now have healthy profits that they deserve for taking that risk, 4 months ago, 6 months ago, they're now selling some stock, taking it off the table, but that money is inevitably going to go right back into the sector because people who wrote checks 6 months ago, 5 months ago, 4 months ago, these people were interested in this sector because, today looking at the mining sector as high as it's gone this year, it's easy to say, oh, everybody wants to jump into this sector. But believe me, January 18th was the all-time low for the TSX Venture. Writing checks in February and even March and April was not an easy thing to do, correct?
Huge leap of faith. Huge leap of faith.
Huge leap of faith. So now the money will go back in. Okay, so looking at the rest of 2016, what do you think we're looking at? Do you think we're looking at a consolidation period because we have had big gains? Or do you think a kind of a resumption of this massive rally that started in early February or even late January? Do you think this will resume in the next, let's say, 3-4 weeks here?
I do believe that within the junior mining sector, we are going to see a doubling down. This money is going to come back into the sector. I can tell just by the deal flow that comes across my desk that I'm seeing sort of the same thing that started to happen in as early as mid-November last year, late December, and into January, where the level of opportunities continued to rise and to the point where I was looking at 2 and 3 and 4 per day. Today I've already looked at two brand new deals that I had never heard of. And you're starting to see, some of the symptoms of a more mature junior mining cycle creep in. Like already you've got closology plays where guys are staking ground proximal to properties that have had good drilling, that have had success, where there's a deposit shaping up, there's a seasoned management team behind it. It's one of the symptoms of a junior bullish market that companies that are newer try to associate themselves with the success of those that are more established. So when you see all of these things start to happen in a traditional junior gold mining cycle, you sort of get to understand that, this is a real bull cycle, and the the bias is definitely bullish despite short-term and recent weakness. Now, you've got some other mitigating factors here, and among them, for example, our favorite topic up here north of the border is what is going to happen if Trump gets elected. And on the one hand, to listen to the mainstream media, you would say, well, the consensus is that is just not a possibility. It's never going to happen. Then on the other hand, you listen to, the more, well, it used to be right-wing. Now I guess it's conservative, super right-wing. It's getting confusing because even the right-wing guys are denouncing Trump. But you're starting to hear, for example, we know that Fox Business, for example, Breitbart.com, these entities are huge supporters of Trump. And so they're obviously huge supporters because there are a lot of supporters of Trump out there. And when you listen to what people are saying about Trump, it's not so much that he's a perfect candidate for president. It's just that he represents profound and absolute change in a thorough upset of the political establishment. And so I think the reality or the possibility of a Trump victory is very real, much more real than is portrayed in American media. And what does that mean for junior mining? Absolutely great for gold. And cement factories. We have a joke up here where we say, well, we're going to buy cement factories in gold because now he's going to start to build all these walls. But of course, the one thing that people start to realize about Trump is he's not going to do half the things he says he's going to do. He's kind of like the guy who stands up at a party and starts telling a joke about himself, and everybody there knows the joke's not really true or about him, but they're all going to laugh along with him because it's a joke. And that's kind of Trump's shtick. And so he's using it to maximum effect to get where he's going. And so when we bring it back to the question of what's the next 4 weeks or the final quarter of 2016 going to look like, well, it depends what Trump does. Is he going to get elected? That's certainly going to, I think, drive interest into precious metals. But then again, the more that Japan prints money and Europe prints money and the UK is moving towards stimulus now and negative interest rates, and even corporations in Germany are floating negative interest rate yielding corporate debt, that's all positive for gold too. And so the more that those fiat synthetic assets, which are essentially sovereign derivatives, become zero yielding and actually have a cost associated with owning them, the more it makes more sense to put money into hard assets whose value might fluctuate over a macro period, but always has an intrinsic value. And then that's when you start to see money flow more into, zinc and copper and, even things like iron ore. That's sort of one of the influences that pushes these cycles into, a start and a finish, is this movement from fiat synthetic sovereign derivatives towards real tangible assets back and forth again as this, as history unwinds itself and these currencies collapse and fail and, the whole thing gets reorganized, rinse and repeat ad infinitum. But that's always the case for real tangible assets, not just precious metals commodities, but other metallic commodities as well.
When you say currencies collapse, I mean, I have believed that the currencies we are in a currency crisis. I mean, obviously we have zero interest rates, negative interest rates. And of course, the biggest question for people is when and which currency. Do you think there's a specific currency that people should avoid that is a major currency? Obviously there are many currencies we should avoid. But I mean, let's just pick the big two. So the US dollar and the euro. My feeling is that if the euro has trouble, that's good for the dollar. But the dollar having trouble is not necessarily good for the euro. What are your thoughts on, there's a case out there, even though as bad as the fundamentals are for the US dollar, there is a case to be made that if there is a crisis in Europe, or even, actually there is a crisis in Europe, and that will actually be bullish for the dollar because, high net worth individuals, institutions, will flee into the U.S. dollar as an escape from their own currencies, even though the dollar is really just the tallest midget in the room.
That's very well said. The crisis that is threatening Europe is existential. I mean, you've got these nationalist sort of pockets flaring up everywhere, not just in Germany, or not just in the UK rather, but in Germany, in Spain, the Catalonian vote for independence is very much alive and well. Scotland is now considering separating from the UK so it can go back to the euro. You've got this, the Brexit vote has catalyzed this massive sort of rupturing of the entire consensus prior to that we were going to move ahead as the European Union no matter what came. Well, now that's off the table, and there's the crisis. So yeah, currencies are, that's not looking like a very viable or safe currency going forward. Now, interestingly, you've got these same forces at work in the United States of America. I mean, again, it comes down to, will Trump get elected? If he does, he's certainly a divisive force, not a unifying force. He's going to cause, all kinds of strife among different races, different religions, a trade war among different trading partners as he seeks to establish an America First mentality that actually undermines international relations. So Europe's crisis could quickly become America's crisis. So the unattractiveness of the European currency, in my book, is very much possible for the U.S. currency. I mean, I think that if you were going to look for a currency where you'd want to, sort of deposit some idea of security, I would say it would be, possibly the Japanese yen or even the Chinese yuan. And that's just because Japan has survived so long on stimulus that the yen is whenever the U.S. dollar is suffering, it's the yen that benefits, and vice versa for the most part. And so if it follows the logic that if the same problems in Europe are going to cause the same crisis in confidence in USD, that I would be heading towards the end. But really, I would not be focused on keeping anything more than near-term operating capital in any currency, in which case, in my case, it would definitely be Canadian, because I want to move as much of my assets as possible into precious metals and companies that are going to respond well in a precious metals bull environment, because I've long lost faith in the ability of currencies to retain their buying power and their value over longer periods of time.
With Trump, I just got to say, they'll either probably push him into a war because they'll want to derail and teach the masses a lesson, or who knows? I mean, my goodness, it's almost like his argument to the African American community. What the hell do you have to lose? I mean, we have Hillary Clinton, who's definitely an arm and a tool of the oligarchs. And then you have Donald Trump, and yeah, he's going to turn the table over. We really don't know what the hell we're going to get, but hey, what the hell do we have to lose? It's not really working out, right? Like, the America First attitude might not be the best financially, but certainly the everybody else first has not worked out at all for the United States. Not the manufacturing people, not anybody that lives next to a southern border. It's not working out. So
you bet. That's right.
All right. James West, without a doubt, I got to say this. It was one of the best interviews I've had in a long time, specifically on the mining stocks. I hope that, I don't know how we haven't interviewed you before, but I hope we get to interview a lot more. So James West, everybody, I'll have the links for you. He writes for the Financial Post, author of the Midas Letter. James, again, thank you so much.
Thank you, Daniel.